Hey guys, this is Theta Trades, and today we're going to be talking about RIOT Blockchain. Now, for those of you who don't know how Bitcoin miners make money, I would suggest checking out my last video because I go over that in the beginning of it. But today I want to focus on how I'm trading RIOT. And the bottom line for me is I really don't know exactly how to feel about RIOT. I think there's some strong positives going on right now. We've talked about their hash rate going through the roof. It's already went from about 80 petahashes per second to the mid 200s. And by the end of quarter 3 of this year, that number should be around 450. And we've already seen these improvements in hashing translating to an increased inflow of Bitcoin to RIOT. And that has all been great. An additional plus is in their first quarter report. The company's talked about not needing any additional cash until the end of this year, and that's kind of one of the biggest things with RIOT. We can look at their chart here, but they have really never been profitable. They've accumulated a deficit of $220 million over their entire existence. Now, a lot of this existence, if we scroll all the way out, is of them as a biopharmaceutical company. And if you see these peaks, don't go nuts. This is because of reverse splits to keep themselves from being delisted. They switched over to Bitcoin mining at the end of the third quarter in 2017, but that hasn't changed the fact that they've still managed to lose money in this time frame. Now, recently, they've come as close as they have to break even, and it looks like if this hashing increase can keep helping them, then we could see them actually cross into the profitable range. But that's where a lot of the downside comes. We don't know exactly when this will happen, and in that same first quarter report, they talk about one of the biggest swings for them has been the price of Bitcoin coming up. I mean, we can change over here, but we can see Bitcoin was much higher in price later in 2019 and early 2020 than it was before. So if Bitcoin were to come back down or stay flat, their revenue really won't change that much. Now, the increased hash rate should translate to more Bitcoin coming in for them, assuming they continue to outpace their competition in the increase in hash rate. So you still could see some upside, but really what needs to happen is Bitcoin prices need to come up even more. By my estimate, they could be breaking even at about $12,000 a Bitcoin, and that's where the halving comes in. The arrow on this chart indicates when the second halving happened, and as you can see, huge run-up. Similar thing happened at the first halving. This chart won't go back far enough to show that. Actually, that's interesting. It will now. I don't know when they added more data. First halving happened here in November of 2012. You can see another big run-up happened here. Second halving happens and whoom. So that's why the third halving is so exciting for people. That happened last week, and now they're expecting something similar to happen. And if that does happen, that is fantastic for RIOT. They are going to be very, very well off. And they won't need to continue to raise cash as they have been, because the way they've really operated is to continue issuing equity to people. And currently they have a deal where they can issue up to $100 million in at-the-money offerings. And they've already taken advantage of about 9 million of that. So that still leaves about 90 million that they could do at any time. And at current prices, that is significant dilution because they've only got about a market cap of 60 million. And flooding the market with so much more won't help current shareholders that much. So that's the thing. If we do see this run up to new all-time highs, RIOT's going to be a great stock to hold. The downside, though, is if that's not relatively quickly, you could continue to see dilution of shares, and that's not super exciting. And one of the biggest things for me is that the Bitcoin prices are unpredictable. To see a run-up, what we really need is really people's thoughts to change about Bitcoin, because right now there's no real use for Bitcoin. And I know that's going to be rather controversial for a lot of people, but the thing is, Bitcoin has relatively small block size, which means relatively few transactions can be processed for any given block added to the chain. And so if you end up needing a transaction to go through quickly, like instantaneously, you know it's no good, because it's going to take some time and you might not even get in the first block unless you're willing to pay some money to the miners so they'll actually put you in the next block. And so there are fixes to that, and other cryptocurrencies do this. Ethereum, the second largest cryptocurrency, is transferring over to another way of verifying transactions that's much quicker. So instead of waiting 10 minutes for your transaction to go through, which is the time it takes to add a block, you could wait 7 seconds. The danger of that is if Bitcoin ends up making a similar transfer, Riot is in trouble because that is a proof of stake method and Bitcoin uses proof of work. Proof of work is what the entire miners do. Proof of stake relies on how much currency you hold. Riot only holds about 800 Bitcoin right now. So really the biggest beneficiaries are going to be the Winklevoss twins if a transfer like that happens. So at the end of the day, the way money's made in Bitcoin is by selling it to the next highest bidder. And that's what Bitcoin needs to see another run-up, is for there to be a series of events where people are willing to pay more and something causes that to happen. I don't see it getting into common use very quickly because of those issues I just talked about. If it's solved by not just increasing the block to a sufficient size, which I don't know the technicals on whether Bitcoin can make that transfer without having to recompute the entire block, which is not something that is feasible. If it does end up being a change in how the proof of work is done, that'll kill Riot. But getting into how I'm trading Riot, I see some good upside and some potential really good upside, but I also see some significant downside. And so originally I was just going to stay out of Riot completely. I didn't really love the risk of it. But when I looked at the options chain, I noticed something, and it's somewhat gone away, but you can see the implied volatility is off the charts. And this number's been as much as 500% over the past week. But that's only true for these more closely dated options. The further out you go, the smaller the implied volatility. You can see this is 155% for January of 2022. If we look even, let's go to December. These have actually gone a little up in implied volatility, but you can see they're also in that range, 139, 150. So when I saw that imbalance, I noticed I can collect a lot of premium from these short-dated options and not pay as much premium for the later options. So what I've done is I've bought some of these December options, the call options, and I've sold $4 options against it. So this means even in the event of assignment right now, I would collect $22 for each one of these, which already would be a 34% gain for me. So if exercised, I'll still be fine. I don't anticipate that happening. I do not think Riot is going to double in price over the next week, but I'm going to continually do this and to reduce my cost basis. And so I was able to collect an average of 8 cents for each of these $4 calls. If I can do anything even close to that next week, I'm almost going to be able to jump down to these $3.50 calls, start collecting even more premium, and also be guaranteeing a profit while doing it. And so while this implied volatility probably will not last, I think it'll last long enough where I can take sufficient advantage and get these long-dated calls and maybe even make money without ever having them cross into in the money. I can just sell calls against it this entire time. And that's just what I felt comfortable with. The only other way I would consider doing this is by selling puts against Riot. And as you can see, you can collect some pretty good premium here. Now, the one issue across the board is there is pretty low volume across all the Riot options. But because the premiums are pretty high, I would also consider selling puts against Riot. But I just saw more downside in this than the synthetic covered calls, and that's where I fell on it. So guys, tell me what you think. The one other thing I'll mention is there is another Bitcoin miner that you can trade. They're called Rocket Fuel Blockchain. You can't do it on Robinhood, but you can do it on Charles Schwab. But they are an OTC transaction, so just be cautious with that. But you aren't stuck with just Riot. I only talk about them because they are the most accessible, and obviously being listed on NASDAQ is a big advantage. But please guys, let me know what you're thinking about Riot. How are you trading it? Are you going ahead and buying shares, or are you staying completely away? Either way, I hope this video helped you out. If it did, make sure to consider subscribing. And until next time, guys, this has been Theta Trades, and I'll see you later.